So I'd like to welcome Alan Rajah. Alan is a partner at Lawrence Grant Chartered Accountants. It's a firm that specialises in the healthcare sector. So Alan, I'm just going to hand straight over to you to just tell us a little bit about yourself and the topic that we're focusing on today.
Thank you, Alka. I'm delighted to be invited to present this webinar on tax planning for the GP locum profession. As a short introduction, Lawrence Grant has been supporting the healthcare industry for the last 20 years. We've been helping our clients to minimize the taxes and help them to improve their systems and processes. Let me share my screen with you on the topic we're going to discuss today. And what we're going to discuss today is tax planning for the GP locum profession. The topics that we'll be covering during this webinar are inheritance tax planning, how to improve your cash flow, savings for tax, NHS pensions. So let's look at the inheritance tax planning that we have for clients. With the current climate that we're in at the moment, I would strongly recommend that everyone should undertake inheritance tax planning for yourself and your parents. You should also complete a lasting power of attorney, also known as an LPA. There are two types of LPA. One is a property and financial affairs LPA that allows your nominated person to deal with managing your bank account and investments. The second one is the health and welfare LPA that will enable your nominated person to make decisions about your health and care. So how to improve your cash flow? There's some basic tips on how to improve your cash flow. For a start, you should contact your indemnity insurance provider to postpone your monthly payments where possible. You should also review your monthly outgoings and cancel unnecessary subscriptions. You should also review your current mortgage arrangements. For instance, if you have an offset mortgage in place, any income in your current account will be used to offset your mortgage balance. As always, you should always seek independent financial advice before making any changes to your mortgage arrangements. As a rule of thumb, you should set aside about 40% of your gross income to cover taxes. Ideally, you should have a separate bank account to ensure that this is kept separate for your monthly outgoings. If you do have an NHS pension and you're subject to a tax charge due to excess pension contributions, you should consider scheme pay to cover pension charge.
Yes, how does this affect GPs, Alan?
Well, GPs need to be aware that using scheme pay will affect their drawdown in retirement. What it means that you're actually using a pot to pay the tax charge that you incurred in the current tax year. But as I said, it will affect your drawdown when you come to retirement. You should also use a good investment advisor to provide advice on your investment and pension planning.
Great, thank you, Alan. That was a very, very quick overview on a little bit about tax planning and some good tips on improving cash flow. We'd probably want to find out quite a bit more, so if we've got more questions, where do we come and find you?
Yes, okay, you can contact us through our website, www.lawrencegrant.co.uk, and I'm more than happy to take emails. Just email me at alan@lawrencegrant.co.uk.
Wonderful. Thank you so much.
Thank you, Alka.